hate that part. All right, ladies and gentlemen, welcome back to another episode of the Bottom Line Podcast. So we say what we mean, and we mean what we say, because at the core of everything that is, was, and forever will be, there will always be the bottom line. Today's guest is a comeback guest, one of my favorite people to talk to. This guy here makes everything pretty practical, understandable, and realistic, which is why I like following his content. Love having him on the show. And his recent posts have just inspired me. So one of the things people don't think about with the coaching business is that sometimes the well can dry out. And coaches and motivational speakers, we look for inspiration. You know what I mean? It's not just about inspiring people and helping people, tap on their true potential, but we also look for inspiration. And I look for inspiration also. So today's guest, Alex Leykind, right?
Thank you, sir.
Help me pronounce it. Equitas
Capital Group.
Equitas Capital Group, right? Alex has been on the Bottom Line podcast 2 times, and each time a lot of value. I learned so much about what's going on in the real estate market, commercial side, and what we should expect as far as activity in the real estate market, especially in New York, right? So Alex here is managing director over at Equitas Capital. Does focuses on commercial loans, specifically mixed use properties, multifamilies, small businesses, and also office spaces. So, Alex, I really wanted to get you on because when we first started talking, I think on the first episode we were like in the beginning of the pandemic, right?
Yes, sir.
And even to go a little bit before that, when I first reached out to you, I was like, "Hey, Alex, how's it going, man?" I think you were just maybe a little over a year ago, right? You were just going out and doing your thing, right? And
Correct.
so I've been watching I've been watching your growth, watching, your progress. And like I said, very inspiring. But then at the same time, what you hear a lot of people is they're leaving New York. New York is not what it used to be. It's going to be, hard to make a comeback. You hear the complete opposite. Right. So what I see with your activity, I'm like, well, that's not what Alex is getting. So
That's actually quite the opposite.
yeah, man. So I kind of want to go into that a little bit, man. How have you been since we've been opening back up and everything? How's things been going for you?
Well, first of all, thank you for having me back. It's always a pleasure. Things have been a little chaotic. I think the commercial real estate market in New York's on fire. Don't see a slowdown. Didn't really see a major slowdown even last year. Obviously quarantine months were a little separate.
Yeah.
But, people buying, people transacting, people refining, people building buildings. We do a ton of construction financing.
Yeah.
People are all in.
Yeah.
Developers are doing multiple projects at the same time. A lot of small businesses are buying properties for themselves now.
Yeah.
Especially where interest rates are. Market just keeps growing and growing.
Yeah, yeah. So you're a relationships guy, right? Like you strike me as a relationships guy. You're not a super transactional kind of guy. You're in it for the long haul, right? So it's kind of like I kind of want to get your perspective on when you hear people the exodus out of New York City, California, these areas where taxes are high, especially corporate taxes and property taxes are high. And you hear, right now housing prices are high, right? How does that affect your space, especially with commercial lending?
So on my side, I haven't seen, a max exodus, I would say. A lot of the larger commercial sponsors didn't go anywhere.
Okay.
They didn't go anywhere. They're transacting and, no one's in a selling frenzy either. So even if someone personally moved their home to South Florida or wherever,
Mm-hmm.
they're not liquidating assets. So, the market's kicking, and I would say quite the opposite.
Mm-hmm.
That, I've actually seen a lot of our larger clients that, kind of ran for the hills last year. And guess what? They're all coming back.
They're all coming back. Okay. Are you seeing like dual residency where people are like, maybe have a place in Florida, or like they say, I'm going to keep my place here in New York, and then I'm also going to get a place in Florida. Are you seeing a lot of that also?
There is, but those are the people that are, that wanted the second home and think they're going to spend most of the time there are coming back.
Yeah, yeah. What industries do you see are renting out these spaces, right? I think when we talked before with the commercial space, so I see a lot of retail is come trying to make a comeback with like some of the new constructions. I see
Hmm?
student housing is a thing also. Um, uh, Medical offices are big. Do you see more like what quote unquote essential businesses are the ones that are leasing out the spaces or financing spaces right now?
So correct. I would say that's a majority. Majority would be the essential businesses. But you know, we're getting a ton of requests, restaurants, people wanting to open new restaurants and new themes and new, extracurricular activities and so forth.
Yeah,
Um, people are asking the questions, people are looking for good deals. Just
hmm,
people are always looking for good deals.
yeah.
But absolutely, absolutely. People, life goes on.
Yeah, yeah. So you're a born bred, real deal New Yorker, right? So,
Absolutely.
well, I talk to New Yorkers and they're like, I'm not going anywhere. I don't see a reason to go anywhere, right? And it's like New York always makes a comeback, right? So, okay, let's look at where we were with the pandemic, lockdown. Everybody's working remotely. You seem to always be going into the office, right? Your team, do you have people working remotely? Do you have people working on a hybrid schedule? How's that?
Full house.
Full house. Okay. And
Full house.
what about the your borrowers? How are they coming into the office? Are they
Tons. Tons.
really? Okay.
No, no, no more, no, no more COVID, no more COVID stuff.
Mm-hmm.
People coming with no masks.
Yeah.
Everyone got the vaccine. Everyone's loving life.
Yeah. Are you busier now since the vaccine rolled out?
You know what? Since the vaccine, and the vaccine was kind of the lighter fluid,
Uh-huh.
but as people got vaccinated and more as things open up, um, life is continuing. People are doing what they got to do,
Yeah.
and on the financial side, the banks are easing up. A lot of, I would say most lenders, if not all, last year they had special like COVID reserves, where if you're borrowing, money, they want to hold a certain amount of money in escrow. If there's another quarantine, all of that went bye bye.
Yeah. Okay. So we're back to like a normal.
We're back to real life.
Okay. Yeah. What are you doing for networking right now, man? Are you out and about meeting people, or are you just like working the relationships you already have?
So we're actually very fortunate that I would say 100% of our business is all referral based.
Mm-hmm.
So our clients, our referral partners, everyone tells a friend.
Yeah. Okay.
I actually, we had a closing today for a doctor that we got government secured financing for. And he literally called me from his closing. He's like, "Hey, I have one of my friends on the line. He wants to do the same thing I just did. Can you help him out?"
Nice. Okay.
All right,
Yeah.
sure, absolutely, absolutely.
Yeah, yeah. Love it. So, what people want to do is they want to get to where you're at. You're at 100% referral right now, right? So, maybe some key things that you could tell us, right? When it comes to like building that relationship long term, right? And what you're doing, I think in the lending space, you'll close, a loan here, you'll close a loan there. Doesn't matter the amount. You're making a lot of deals happen in New York. It's just the way it is. But I want to go more to like the relationship side of it, right? Like how do you help people? Because there's a lot of changes right now, right? And there's going to be a lot of changes with the new administration. So it's like with all these changes, are you managing expectations? How do you keep people coming back to you, right? With so many lenders out there doing what you're doing.
So I think that our industry and the real estate industry is, in my personal opinion, it's very, very simple. Okay.
Yeah.
And I think it's the basic concept of it is a lot simpler than most other businesses, because our industry, we're not selling widgets, right? So the
Right.
price of plastic goes up, a screw goes up,
Right.
your margins are off, and so forth. That's not our business. Our business is based on two basic quintessential principles.
Hmm.
You're in the service industry. You provide the service.
Right.
Sounds as simple as that sounds. 99% of us miss the mark.
Hmm.
You provide the service.
Hmm.
And number two is you do what you say you're going to do.
Hmm.
No BS.
Right.
Okay. It's not all gravy. I got to make the tough phone calls also, like we
Right.
all do. But it's all about how you It's all about how you do battle on behalf of your client.
Yeah.
I actually had a call. It was a funny story. I had a call with a lender and with a very large New York City-based developer.
Hmm.
And the lender was like, Alex is your gladiator. He's going to
Nice.
fight for you. He's going to fight for you all the way.
Nice.
And it's that basic.
Yeah.
You tell the good, you tell the bad. You don't run and hide. You tell them the way it is,
Yeah.
and you come up with solutions how to get things done.
Right.
Because every single deal has issues. Every single deal has its own merits. It has its own time delays and so forth. And it's all about how you address it, how you fight the deal head on.
Yeah. Yeah.
And if you provide the service, those are the two basic principles, and that's what we do.
Yeah.
Me, my entire team, I talk to clients 10 o'clock at night. I talk to clients 7 o'clock in the morning. Saturdays are inbounds. Sundays are inbounds. I had a conference call with, a bunch of attorneys and lenders on Memorial Day.
Right.
It's you got to do the work.
Got it.
And if you put in the effort and you put in the dedication to your clients, and they know that, you're not going to leave them hanging,
Right.
and you're going to be there with them, that's the name of the game.
Okay. Yeah. So you're pretty much there for them through the whole process, right? Beginning to end, initial to close. Yeah. And then with right now so we have a lot of changes going on. You've got the vaccine rollout, right? It's a lot busier. Some people say that we're living in inflation, and then some people say that inflation is on the rise, right? You see gas prices are going up, box of eggs is going up, right? Carton of milk is going up, right? So like interest rates are right now doing what they're doing, depending on what you're borrowing for. How do you explain that? When somebody who's looking for a long-term investment, right? They're probably looking for what? The life of the loan is probably like 30 years, right? So how do you explain inflation? How do you prepare people for what's to come?
Listen, I think that inflation is here. It's a very real thing, and real people feel it.
Yeah.
I think that this particular inflation, I think, is going to be somewhat transitory.
Yeah.
And I agree with the Fed. I think that's what happens when the world shuts down
Mm-hmm.
for 4, 5, 6 months,
Mm-hmm.
and everyone sits home. There's no production
Right.
of any kind. And when production, when they turn the engine back on, they got to catch up
Yeah.
for the last, 6 months that no one was working. And you do this on such a macro level that there has to be, right? There's no other way.
Yeah.
It's not like they had stockpiles of whatever they needed, and now they could just pump that inventory out.
Uh-huh.
I think from a standpoint of investing, I think this is, the epitome of an ideal time,
Mm-hmm.
because interest rates are still at historic lows. They're a little higher where they were 6 months ago.
Mm-hmm.
But that's that's the progress of moving out of the end of the world doomsday scenario.
Right.
And then the reason why it's such a good investment time is because your cost of borrowing, which is going to be fixed for a long period of time,
Mm-hmm.
is cheap.
Okay.
And as inflation keeps ticking up, as like you said, bread, milk, everything goes up in price, your cost to borrow is going to stay fixed.
Uh-huh. Okay.
And if you could lock in, 3.5% interest rate on a $10 million loan
Yeah.
for the next 10 years,
Why not? Why not?
you're banking on, you're banking on the upside.
Yeah, yeah. Okay. So are these conversations you're having daily or not so much? Because people pretty much already know. They've been following the markets. They've been for years, cycles.
No. So I'm actually a very big proponent of education.
Mm-hmm.
I want our clients to have a thorough understanding of, why this works, how this works, and what it works for.
Yeah.
So, we all want an educated consumer.
Right.
And I have conversations with our clients all the time. I have, market updates with clients.
Yeah.
We tell them what's kind of the state of the market, how, treasuries are moving,
Yeah.
and so forth.
Yeah, I like how you said that it's transitory. Can you break that down? Let's just say, because here's the deal, right? Some people don't understand what that means, right? I mean, you've got years and years of experience in the game. My understanding is right now we're going through a transitional period, so it's like it's a constant revisiting, right? You'll hear the what is it? Here's the joke, right? The Fed is talking about whatever, right? That's the joke right now, right?
Yep.
Tapering, I think, right? And so if that starts, let's go first with the transitory. Tell me what you mean by inflation right now is transitory. Just break that down for me.
So transitory ultimately means that this is a period of time once supply chains get back online.
Mhm.
And as more inventory, whether it's, lumber or steel or I don't know, gadgets or widgets, whatever it
Yeah,
is,
yeah,
as inventory builds up and as production keeps, firing on more and more cylinders, that lack of inventory is going to get filled,
right,
and that impacts every part of life. I mean, look at, go try to get a car, go try to buy a car.
right,
Cars are flying off the shelves, everything's flying off the shelves.
yeah,
But, as supply kind of catch up
right,
or, catches up, that is,
yeah.
it's going to even out.
Okay. Over what period of time do you think?
Don't know, can't comment because it depends on, so many macro factors.
Hmm.
Don't forget, we live in a global society, not an American society, unfortunately,
Right,
where, we all depend, every person in the world depends on another country for something or other.
right.
So, that's something that is very hard to quantify
Yeah,
or put a time frame around.
I hear you. I hear you. People are expecting like inflation, like 2022. We should look out for that. Like we should expect that. Here's what's funny, okay? To me, I think this is hilarious. We were on lockdown for a minute, right? For a while, and people were staying at their home, working from home. It was kind of crazy, right? Now you get depending on where you are, a gallon of gas is $3 a gallon, $4 a gallon, depending. And it's kind of like I don't care. I just want to get out. I want,
Absolutely.
you know what I mean? People are not, they're like, yeah, I see it. I see what the price is, but I want to get out. I want to go do things. You know what I mean? So they're not, they don't, because it's kind of like, where were you 6 months ago? You would have paid $4 a gallon just to get out of your house and go, across the country, right? And now you see
Yeah.
more road trips. You see a lot more road trips. Some people are, flights, but flights book pretty fast. So it's kind of like road trips make
Yeah.
the most sense. It's practical. People don't care. Like a lot of people just don't care to pay $3 a gallon or $4 a gallon to travel right now. But what I'm wondering is, okay, if you're making an investment over the next 10 years, 15 years, whatever it is, right? Where do you think it's a good idea to cut costs, right? As a business owner.
Ooh, good question. Um, I would say for essential supplies, that whatever your business needs to operate.
Hmm.
Okay. I could focus predominantly on, on my industry, and where a lot of that stuff is going on is, a lot of developers, for example, right? They're buying inventory in bulk
Hmm.
to absorb, the skyrocketing cost of construction supplies.
Right.
Okay. And they're all looking, maybe even internationally at this point, um, to curb that supply.
Hmm.
But then again, it's different. Every business is different.
Yeah.
You know, Everyone is kind of feeling the ding of inflation, but overall, large picture, it's very industry by industry specific.
Yeah, yeah, yeah. So I'm looking at like the commercial space, for instance, where you're lending, doctors' offices, they'll see less people, right? Because they don't want that during the pandemic, they were seeing less people. Now they're starting to see if they can get more people. You got doctors' offices, chiropractors, podiatrists, and such, right? Urgent care centers, right? Then you've got people who are, barbers, hairdressers, restaurant owners. It's kind of like, especially with the restaurant industry, is you want to get, business back to normal, but you got to cut costs somewhere so that you can maintain, right? With property taxes going up and
Sure,
such. So it's like, where do you, depending on who you're lending to the most, and they want to travel. People do want to travel. They want to get out. They want to enjoy life, but you kind of have to allocate the funds for that, right? You got to be
sure,
practical about it. You know what I mean? So it's like, from
sure.
your experience, somebody who's familiar with, like, the finance industry, the numbers, where do you think it would make sense, right? It's like, for me, I'm like, look, I'm probably gonna just work remotely or on a hybrid
Hmm.
schedule instead of leasing out a space, right? So that way I don't have to commit to a full 5 years or 3 years or maybe even a year lease. You know what I mean? So it's like pay as I go. But I'm a small business owner. I'm actually a
But
solopreneur.
but you're the guy that, in my experiences in the, let's say, office market,
Hmm.
it's the bigger companies that are downsizing space.
They are.
You know,
Okay.
the larger companies, and even a lot of the larger companies,
Hmm.
that window's going by real quick.
You think so?
Okay, because some of the largest, financial banking institutions, everyone get back to work.
Yeah.
You know what I
Yeah.
mean? But the people that are really going to bat on this stuff, and the people that are taking the spaces, um, are small businesses in the service industry
Hmm.
that, companies such as myself, companies such as you,
Hmm.
that, I'm a small business. I have an office. I have clients come see me, the attorneys, the accountants, the title companies, the doctors, the speech pathologists, all of those.
Hmm.
Um, we just did a project. It was an office building in South Brooklyn, 24,000 square feet.
Okay. Wow.
So, and a lot of people are like, you guys are crazy,
Right.
you're going the other way.
Yeah.
Well, guess what? That building was 100% leased, fully spoken for prior to certificate of occupancy.
Wow.
And every single tenant in there is a small business.
Yeah.
Every single tenant is in some form of service industry, like I just mentioned.
Right.
And those are the people that are expanding, taking more space, taking new space.
Yeah.
And those are the people that are,
They're
firing in all cylinders.
yeah, they're expecting the growth. They're expecting the business, right?
They're seeing the
They're
business.
seeing the business. Okay.
They're seeing the business.
Yeah.
Attorneys are busy. Like, from what I see dealing with a lot of smaller business owners that that buy properties,
Hmm.
10-15%, 10-15% dip.
Yeah.
That's it.
Do you think the workforce is affecting it also with people looking for work? And I think, in New York, just hearing you talk too, it's kind of like people are not worried about coming into an office as much anymore because of COVID. They kind of just want to come get work. Do you think the workforce
The
is
labor
driving the
force,
occupancy?
the workforce is, but the employee shortage,
Uh-huh.
it's actually a very real thing.
Hmm.
It's a very, very, very real thing.
Okay.
And I personally experienced it. It's, extremely hard to find good help.
Okay. Is it?
A lot of my friends that are small business owners, the doctors, the
Yeah.
chiropractors, and so forth,
Yeah.
all experiencing the same thing.
Yeah. Do you think it's because of the unemployment that's still there, or is?
I think that has something to do with it.
Uh-huh.
I do. And I think, in my personal opinion, I think it's also kind of firing backwards because, the people that are collecting unemployment benefits and so forth,
Hmm.
I think they're the ones that are also seeing this pent up demand.
Yeah.
And those are the same people that are fighting outside of their weight class.
Hmm.
They think that if they come back to the labor force,
Hmm.
there's such a shortage that they could,
Come
set,
in.
set,
Yeah.
command the rules.
Yeah, yeah, or a higher salary, right? Because you need me more than I need you right now, kind of thing.
Exactly spot on.
Right, right,
Okay,
right, right.
exactly spot on. Like, I've interviewed, potential candidates for us,
Hmm.
and some of the numbers that they're throwing out.
How'd you come up with
I
that?
told them, I'm like, maybe I should work for you. Like, are you
Right,
hiring?
right, right,
Maybe I
right.
could get a job.
Yeah,
It's so. I
yeah,
think that's a very much a double-edged,
yeah,
dilemma.
yeah. So as I'm thinking about it too, because I started this whole thing, right? Like I used to just focus more on ideal clients, attracting ideal clients, right? And then what I started doing is helping people not only attract ideal clients, but then also attract top talent, develop top talent while you're at it, right? So now I'm starting to partner with recruiters, right? And the recruiters that I'm talking to, they're saying the same thing you're saying, where people are just not realistic. They're not an updated resume. They're not, showing the transferable skills, right? And they're not marketing themselves enough. But then you hear when you turn on the news or anything, you'll hear about wages and you hear about, it depends too, right? Because like in your industry, it's different, right? It's more like eat what you kill. So you got to bring your A game to the table. You got to have some kind of sales experience. You got to have some kind of people,
I'm
skills.
not talking about the sales side.
No,
I'm
tell
not.
me, what are you
I'm
talking about
talking.
specifically? Say again?
Yeah. I know. I'm talking about the operational side.
Okay. All right. Okay. So what about the operational side though? Like, is it, because here's what I'm trying to get to, right? People are leaving high tax states to go to states where there's low corporate tax, right? So like,
Hold on. I'm sorry. I just lost some audio. Hold on. Sorry. All right.
yeah.
Back.
Yep. Can you hear me
Perfect.
okay?
Yep.
All right. So what's keeping businesses in New York, right? Like, because it costs less in taxes for them to go to Florida or Texas or
You
low.
you don't have the market share.
Ha.
You don't have the market. Just sheer human people.
Mm-hmm.
You don't have that. And actually, from what I'm seeing, at least in the real estate industry, um, with the exodus of New Yorkers last year,
Mm-hmm.
I think some of the fan favorite locations,
Yeah.
I think some of those people are losing their damn minds. Because, I'm looking at investment properties for investors, and some of the numbers that we're seeing in those areas.
Mm-hmm.
I actually spoke to a broker recently. Like, I didn't know that they moved Park Avenue, to South Florida.
Oh wow. Yeah.
You know, they're
Ah.
selling, they're selling commercial properties at 3.5% cap rates
In South Florida.
in South Florida.
Huh.
And I had a conversation with my client. I was like, go buy a building on Park Avenue. Probably could get a better deal.
Wow. Okay. Yeah. So it's super competitive down there. Okay. So it's market share. So you get market share here in New York, right? What else is keeping businesses as far as like overhead? Because like for a lot of businesses, it doesn't make sense to stay. But then you get people like you, like real native New Yorkers, who are like, I'm not going anywhere. This is home, right? So
Listen, yes, there's a lot of native New Yorkers that aren't going anywhere.
right.
Um, but there's people coming into New York, you know, like there's always been, you
Yeah.
know, people from out of states, especially, the younger population. These are the people that are moving into New York.
Gotcha.
You know what I mean? And, with all the universities opening and everything else,
Yeah.
we're almost back to full strength.
Gotcha. Okay. Yeah. Let's talk tax shelters a little bit, right? If you can help me out here. And I'm not 100% sure, right?
Okay.
What's going on with this 1031 exchange regulation and such? Can you help me with that? If you could break that down a little bit, like what's going on with the 1031s? Do you know?
So the game plan is to try to eliminate those. But I think that would be a just detrimental blow, especially to the commercial real estate world.
Why is that? Tell me.
Because, when you're transacting on $100 million, $500 million, $10 million, $1 billion transactions,
Hmm.
those are the same sponsors that consistently trade properties and are consistently, moving forward.
Hmm.
And part of the bang in real estate, why everybody wants to do it, is the
Yeah.
appreciation of your hard assets, is
Right.
the appreciation of your property.
Right.
As people bank on that and keep rolling that money forward, the tax consequences will put that, Ferris wheel to a screeching halt.
Hmm.
Okay? Because if you bought a building for, $10 million, and you're selling it for $20 million, and
Hmm.
your cost basis is $12 million, you're going to pay capital gains on $8 million.
Hmm.
Okay?
Right.
Where rolling your capital gains forward, you're still transacting.
Right.
Taxes are still being paid. You're still getting a mortgage. You're still, paying mortgage tax where it's applicable. attorneys are working, banks are funding,
Right.
the economy is working. Whereas I understand that with all the big plans in the United States on, infrastructure and everything else,
Right.
it does carry a very substantial bill. Plus, we have a pretty large credit card bill from last year.
Hmm. Right. A lot of
You know what
borrowing.
I mean?
Yeah.
And obviously, fiscal responsibility is for the U.S. government to figure out how to shore up, start paying down the credit card debt.
Yeah. Yeah.
Um, but I think that would be something that would just be detrimental.
Yeah. So how do we prepare for that, or how do borrowers prepare for that? What's another option besides a 1031?
Don't sell.
Hold it.
Sometimes it makes sense not to sell,
Yeah. Hold it.
and that will minimize activity,
Uh-huh.
and that will substantially slow down the real estate market,
Hmm.
which a lot of people seem to forget that the real estate market's kind of the little engine, that does all it can and drives
Yeah.
construction. It drives real estate, it drives legal, it drives all these other industries from this little engine.
Yeah.
And if the engine slows down, everything else will slow down with it. Like, you remember what happened when the housing bubble burst in 2008?
Oh wait. Yeah.
Now I do not obviously foresee, and I'm not, a an economist,
Yeah.
but I don't see it.
Yeah. Okay. So I don't see it either. I don't understand too much. I know when I was work with some investors, they're looking now to put that money into something now, into a hard asset now, that 1031 now, before any changes are made to it, any are made to it, right? So I get that part. I just don't see how that's going to help the government. I think it'll slow the economy down, right? There'll be less trading. There'll be more holding.
Correct. The way I see it is they're being a little short-sighted because a lot of money now.
Yeah. And then I look at like crypto too, man. Are you in the crypto space at all?
I am not.
No. What are your thoughts? Like, what
I
do you
don't know.
think about this
I'm
crypto space?
not,
Is it crazy? Like, is it realistic? Is it too far fetched? Like, what are you thinking?
I think I think it's an asset class.
Hmm.
I think it will be viable eventually. Um, but in my personal and humble personal opinion, it's too spec and unregulated.
Hmm.
You know
Yeah.
what I mean? I have, as some of my clients tell me, I have an old soul, so I have an old school mentality.
Right.
Um, I just don't understand asset types that could fluctuate 40% in 3 hours based on a tweet.
From Elon Musk.
Obviously,
Right.
I personally just don't understand philosophy. It's just
Yeah.
me, I just don't get it.
Yeah. Okay.
And I think that I think crypto will be here. I just think it's going to be something very different in the next few years, in the
Mhm.
next short few years. Because if it keeps growing the way it's growing, it's going to be regulated, and the U.S. government is going to tax it proportionally, and I think that's going to change it, drastically.
Yeah. Yeah.
Same thing that I mean, look what happened with crypto when China decided to regulate it,
Yeah.
fell off a cliff.
Uh-huh.
You
So
know, and
isn't that
if
what protects it though? That it can't be regulated, depend on like other countries can outlaw it, right? But it still really can't be. I think you can collect the tax. Like if you exchange crypto now, you can get taxed on it, but there are some like ways to get around the tax, I guess, right?
listen, there's always listen. A
I
lot
know.
of people get in trouble for tax evasion, so they all figure out how to not pay the tax.
Right.
But no, I think that just look. I mean, I'm basing it on what happened, right? China said we're going to regulate it 40%. Bitcoin was where? Bitcoin was at
57.
57, 60,000,
Yeah.
and it went down to 30 in a couple of weeks.
Right.
So I don't understand how you could quantify it as a physical asset,
Hmm.
in a transactional economy when you have an asset that could deflate 50%.
Yeah.
That was the case with real estate, right? You buy a building today, tomorrow it's 50% less.
Yeah. Well, that's just crazy. Yeah.
Yeah.
That's just crazy. But I think the idea behind it, right? Because I was doing a little bit of reading around it and doing a little, I watched a little documentary here and there. I listen to a little bit of like Bloomberg or like Kitco News. I don't know if you're into Kitco's like official. I love. Have you heard of Kitco News?
Okay. No.
Yeah. You got to check it out, right? Because it's like people like you, like who are just like practical, straight shooters in the game, boots on the ground. Kiyosaki and other economists, what's his name, Kevin O'Leary, right? They're on there and they're just like spitting straight game, right? And practical stuff that you can understand. You know what I mean? So as I'm listening to them talk, what they're explaining is that the FDIC, they're not really insuring your money at the same way they used to because they're printing all this cash. So people want to put their money into something else that seems to be a little bit more that they have control over. And I think the argument is that there's not anything backing the cryptocurrency. So then it's like gold or silver, right? You feel people feel better there. But I'm wondering, okay, how does that affect your industry? How does that affect lending, right? If more people start going towards crypto and they start trading crypto, or you know what I mean? Like, how does that affect your industry? Do you see your industry being negatively impacted by it?
I know. I don't. I don't.
No.
Um, I don't. I think that for crypto to be factored in and, kind of brought into the real estate, especially the commercial, the commercial world, I think that is going to be many, many years. I know that there was some publicity stuff regarding, some like high-end developers in South Florida started, taking crypto,
Yeah.
sell units,
Yeah.
right?
I heard about that. Yeah.
Yeah. Imagine that it dropped 40% the day after.
Right. Now what?
Think of that way. Okay.
Yeah.
So I think real estate is, a very, established industry, old established industry. And I think for, a revelation of this sort, it will take substantial amount of time for it to, be recognized by the industry.
Yeah. You'll be crushing it in the meantime, like you're crushing it now. So it's kind of like, yeah, you know what I mean? It's kind of like, yeah, let's see what it does, but let me do what I do, kind of thing. That's what I'm hearing from you.
Yeah.
Yeah.
You're 1,000% spot on.
Yeah, man. So let's talk a little bit about expanding, right? Because I know, like I said, you're doing your thing, you're crushing it, and since you started out, you just have been foot on the gas, no brakes, just going, going, going. You talk to your
I
people
don't think we have a brake paddle.
it's non-existent, right? So, like, are you expanding out to the states where there's where people are migrating to, like Texas or Florida?
So we've been actually transacting a lot in those states.
Okay.
As a company, we are expanding into the Southeast. So, we've been actually very active in the Atlanta market. We've been very, very active in the Florida market, from north to south.
Nice.
So those are the areas where, our next corporate expansion is going to go.
Okay. Do you see yourself physically uprooting and going there because you're going to be needed, or will you just like delegate that to someone?
I don't know. I'm kind of a control freak. So
Yeah.
I don't know how I feel. There might be a little travel on the horizon,
Yeah.
but I don't know.
No,
know.
yeah.
Not just yet.
Not just yet. Yeah. I don't see you not being present, right? Because I could tell, like, you're the kind of guy who's probably got to be boots on the ground, got to know every detail what's going on, right? Yeah. I see. You also make time to spend time with your boys and your family, man. So how do you find time for that? I see the pictures going up. I think you got twins, right?
Yes, I have twin boys.
Beautiful kids. Yeah.
Thank you. Very blessed. Um, that's my biggest life dilemma. I'm not very good at it.
Okay.
I know I'm not. I know I'm not by any means. I haven't figured out the whole work-life balance thing.
Yeah.
But it is what it is, and every or any possible opportunity that I physically could have,
Yeah.
got to spend with the boys.
Yeah. Were you going to the basketball games, hitting Barclays, and when you get a chance, when things open back up? Were you doing that
Oh,
pre-pandemic? Are you going to get back to that now?
absolutely,
Yeah.
absolutely. I think we have a team this year, so I think we might go pretty far.
Okay. Yeah, man. Because a lot of deals can happen courtside too, right? Like at the stadiums. You know what I mean? I don't see
Of
you like
course.
sitting still behind a desk somewhere. You're more like out and about doing your
I try to
thing.
be. I try to be. Unfortunately, desk time is also a requirement.
Yeah, yeah. Okay. Yeah. So let me ask you this, right? If you are looking at comparatively, say Texas, New York, Florida, right? And somebody wants to expand, they want to scale their business and they want to, because I think what you would pay wages in New York versus Texas or wages in New York versus Florida, I mean, you probably want to hire in Florida because the cost of living there is less expensive, right? What would be some motivating factors for somebody to actually expand into those in your space, the people that you're lending to, right? What would be some motivating factors for them to expand into those locations, Florida and
So,
Texas?
so great question. I would say I could only answer it partially
Okay.
because, well, I'll answer it kind of two pronged. So from the day-to-day transactions that we work on and that we use, and that we finance, those are large real estate investors. So for them to buy a 500 unit rental building in Texas and Florida, that basically boils down to a price point and what their rate of return is.
Hmm.
Very, very. And I think that doesn't matter where it is, right? If they get a rate of return in Kentucky, well,
Not
nothing against
likely.
Kentucky, but
Right.
they're going for major markets. Tennessee, huge market.
Okay.
So where they get the return, where it's favorable state and local municipality laws,
Yeah.
uh, that's the name of the game for them, right? They don't care where it is.
Gotcha.
For smaller businesses, I think that is a very, very big pill to swallow.
Hmm.
Because it's a completely different market.
Yeah.
You know, you open, let's say a restaurant, right? You open a restaurant in Brooklyn, in Manhattan, in Queens. You have 25,000 people walk in front of your door every 4 hours.
Yeah.
Even today, opening up a restaurant, not everyone is, the Jean Georges of the world
Right.
that's going to open, a restaurant at Bell Harbor Mall,
Right.
right?
Right.
So it's very industry specific. A lot of, let's say, logistics companies and stuff like that. Those are the companies where it makes sense for them to
Gotcha.
kind of locate.
Gotcha.
But service industries, finance, New York is still the mecca.
New York is still the Mecca. You heard it here, ladies and gentlemen. Alex Leykind, Equitas Capital. New York is still the. That's a bar. That's a bar right
That
there.
is, and it's a bar that is going to be very hard to topple.
Yeah, yeah, man. So try to figure this out. Alex Leykind, where is he 10 years? Equitas Capital, 10 years. Like, where are you 10 years from now?
Great question.
People are
Where
following you. You know what I mean? I'm following your activity. So it's
great,
like,
up and up. You know,
yeah,
we're going to give the Goldman guys a run for their money.
I hear you.
That's
Okay.
that's the 10-year plan.
Yeah. Are you poaching guys from there? Or are you like talking to people who
No,
like
no,
want to go to Goldman?
no, no, no. But as I see it, they're the gold standard.
Yeah.
And
Got
my
it.
philosophy is you got to go for the king.
Got it. Yeah. Okay. Do you see what's the other guy I used to follow out there? Knackle. Uh,
Bob Knackle.
yeah, yeah, yeah. They were selling a lot of their buildings pre-pandemic. Do you
Yeah.
see? Yeah. Is that still happening? Is there a lot of those buildings are still being sold, or are they just trying to
There's
occupy them?
there's a lot of transactions.
Uh huh.
There's a lot of transactions of
Yeah.
every kind. Every asset type they're transacting.
Yeah. Okay. Yeah. I'm just wondering if they're selling more, if they're occupying more. You know what I mean?
I think they're all selling, and whatever is needed for personal use is occupied.
Gotcha. Gotcha. Okay. All right. We're gonna play a quick game, hands down the lightning round, right? I
All
love
right.
that you can break these things down for me and make it really simple and practical. New York is the mecca. I think that was my takeaway from this.
All right.
Yeah, for real. Okay, so three questions. I'm gonna ask you three questions. You tell me your bottom line about these questions. If you don't like the topic, Alex, just say pass and we'll move on to the next one. Okay. First question. Now that restaurants opening back up, people are out and about. Are you seeing a future in the restaurant industry in New York City?
Yes.
Yeah. Okay. Where specifically would you say?
New York City. Every
Yeah.
borough. Every borough.
Okay.
The beauty of New York is that it's so, there's so much, so many different ethnic backgrounds. And every community sustains, their own culture, their own, environment.
Hmm.
Absolutely, hands down.
Yeah. Restaurants, they'll make a comeback.
They'll make a comeback.
Okay, retail. Let's talk retail real quick. This is the second question. Brick and mortar or online? Where do you think people will get more activity? Going back into the malls or shopping online? Do you
Online.
see do you see retail making a comeback? Is actually the question.
I see retail making a comeback through another life.
Through another life, like online then.
No, no, no. I mean, retail is going to be, or in my opinion, should be repositioned
Okay.
through use. Okay. I think the historical, Macy's, well, Macy's is the exception, but, you know, storefront, thousand gaps on a block. I
Hmm.
think that, I think it's gone.
That's gone.
And that was gone before COVID. Right?
Hmm.
Retail's kind of been on the, excuse the language, on the shit list for a long time.
Right.
I just think that COVID injected it with hormones.
Oh wow. Yeah.
And, even the people that didn't like shopping online,
Hmm.
guess what?
They're shopping online.
They had to.
Yeah.
The
I'm one of
ones
those.
that, and the people, and the minority of people that didn't embrace it,
Mhm.
because they to embrace it, it ain't so bad.
It's not so bad. Yeah. It's convenient. It's convenient.
There we go. You know
Yeah.
what I mean?
Yeah.
So if you want to buy a T-shirt, you can do it from your couch at 2 o'clock in the morning
Yeah.
and not have to go to a store. I
Yeah.
think that's the philosophical change. And
Yeah.
I think retail is going to go through a metamorphosis the same way as a lot of remember malls?
Right. Malls.
Remember those things?
Right. There's,
Well, a lot of them are, being resurrected under different uses.
yeah.
And I think some kind of similar, progression is going to happen with retail.
Okay. Last question. Third question. Streaming wars. I don't know if you get a guy like you probably don't get a lot of time to watch TV, right? Or like whatever, right? But streaming wars. Netflix, Disney, Hulu, or Amazon Prime. Which one are you more likely? You get some downtime whenever that is. Which one are you more likely to go to? And who do you think is going to win in this streaming war right now? Who do you think is doing better?
Well, so I actually watch all three.
Do you? Okay.
Yeah, I just, I like a show. I don't care where it's on.
Yeah.
Right. But I think Netflix is the 800-pound gorilla
Yeah.
that someone's gonna have to take down, and I think that the closest competitor is Amazon.
Yeah.
Who did they just buy? What's the studio they just bought?
MGM.
MGM. You know what I mean? So Amazon, Amazon's gonna rule the world soon.
Yeah, they got Rocky, bro. Like they got Rocky. They got all the Rockies, and it's like,
They got,
dang it.
Amazon's got everything, my man. They got everything.
Yeah,
Everything.
everything. Yeah,
Everything.
yeah.
And I think that's the biggest contender. And I
Amazon.
think Amazon's just gonna keep growing.
Yeah.
I personally think they're not growing fast enough right now because they're holding
Wow.
themselves back because they just don't want to, make a splash that big.
Yeah. Yeah. You don't think Jeff Bezos stepping down will slow them down a little bit?
Absolutely not.
No.
Absolutely not. He might be the day-to-day guy,
Yeah.
but he's always going to be making those decisions.
Yeah. Yeah. I
The
think so.
largest shareholder, which I believe he is.
Mhm.
You
Yeah.
know,
Doesn't matter, right?
That's the company that is
The contender.
it's not even a contender. It's the bar at this
Yeah.
point.
You think so? I always thought Netflix was a bar, right? I just for some reason Prime just doesn't do it for me, man.
Not
I'm
yet.
into like medieval and comedy. Those are like my
Not
two.
not yet. Wait.
Not
They
yet.
bought MGM. Give them a minute. You know
Give
what I
him a
mean?
minute.
Give them a
Okay.
minute.
Yeah, yeah. He's rooting for the
You're,
underdog.
you're gonna be an Amazon guy soon.
Okay. I got a Prime and I don't use it. I got a Prime membership. I just don't use it.
Not yet. Let's see
Yeah.
what MGM spits out.
Okay. Yeah. Let's see it. Let's see it. I'll wait for that. Yeah.
I think they're I think they're the epitome of a perfectly run business. You
Really?
know,
Amazon? You talking about Amazon or MGM?
Amazon.
Amazon. No, I agree with you. I agree.
Like, I mean, just look, they bought Whole Foods, right? A couple of years ago, right?
Hmm.
I remember 14 billion, 17 billion, whatever they paid for it, right?
Right, right.
The
Whole Foods
next,
was struggling though. No, let's be real. Whole Foods was struggling. People were like, I don't know if I want to buy organic. What's so organic about it?
no, listen, that's fair. That's fair. But
Right?
they still bought it, right?
Yeah.
Paid $1 billion, $17 billion, whatever they paid for it.
Yeah.
And the next day, their stock price went up so much that it was basically, they made $17 billion.
They got it right back. Yeah.
You know, so they Whole Foods on the house,
No, he's smart.
So,
Yeah. That was a smart buy. I agree. I agree. I don't know about Wall Street Journal. I don't know why he had to go pick that up.
but
Right?
that's because when you own everything else, in
You
my
wanna,
opinion,
yeah.
you want to own the trophy stuff also.
Yeah. So you see him
same
going.
concept. The hedge fund guy that bought the most expensive apartment in New York. Remember Central Park South, where like 200 million, I don't know, some crazy number.
Yeah.
Concept, right?
Yeah. You think he should buy CNN while he's at it?
I'm still surprised it's not bought yet.
Yeah. Okay. All right. I hear you, man. I hear you. Okay. I know you probably got to go. Just gonna ask you one more. What is your bottom line, Alex? What is your bottom line? The reoccurring truth for you. No matter what, you wake up on a shitty day, right? But you go to this truth, and this truth brings you back to reality and skyrockets you forward. What's your bottom line?
One step forward every day.
One step forward every day. Yeah. Okay.
You don't take a step back.
Love it. Love it.
One
Very
step forward every day.
There it is. There it is, ladies and gentlemen. Alex, where do people find you?
Follow us on Instagram, Equitas Capital Group. Always reach out to me, 646-637-7510. Alex at equitascapitalgroup.com.
There he is. Ladies and gentlemen, native New Yorker right there, Brooklyn, New York, Alex Leykind, crushing it in the commercial real estate space. Thanks for taking the time, Alex.
Thank you. Pleasure as
for
always,
sure.
sir.
Yes, sir. This was the Bottom Line Podcast. So we say what we mean, and we mean what we say. Because at the core of everything that is, was, and forever will be, there will always be the bottom line.